Morning, everybody. This is Gil. I'm running solo today. I'm going to do a stock hunting webinar. It looks more to me like the market's hunting down stocks and setting them lower this morning. But I got a sense that things were slowing up a little bit yesterday. And you know the way this market works is that you'll get a handful of names that will be acting well. And you get some runners like CyberArk and Trexon, but for the most part everything else will run up a little bit, maybe 5%, maybe 10, maybe 15, like Grubhub did, for example, and then they pull in. And so my general method of operating in this environment is to bag those profits when I have them and then look to buy on pullbacks, and we're getting that now. I think one of the things about this market as well is that when things look really good, that's usually when it starts to slow up. You get a lot of stocks moving, and mostly stocks are moving on earnings, so you get the typical earnings roulette type of situation. If we look at, say, for example, Splunk this morning, this is an early earnings roulette play, but this thing is reversing hard, and it could turn into a big, this is a weekly chart, could turn into a big pod type top. So I'm watching this morning. Probably should have shorted. I had that idea this morning, but I use the rally and data. Yesterday you saw it go into the 100 level, and it failed there. I went short stock yesterday. They opened it up this morning. Gives you a chance to load it up, and stock's coming in a little bit here. We'll see what happens. The other one that's looking pretty weak here, that is a potential pod, and it's acting like a pod, but it's more like you know, the pod formation has a straight down, sort of straight up kind of look. This is more like a big sloppy cup with handle. And so Workday yesterday came out with earnings. They open it up slightly and they hammer it. It's probably headed to the 50-day, 200-day. I guess the 50-day is a little bit below the 200-day, but that's what it looks like to me. So here I shorted this morning just above the 20-day at around 89. They opened it up, I think, right around 89. I think it got off at like 88, 88 or something like that. And it's coming in a little bit. I expect it to retest the low, but it could be done because you've got this huge weekly volume bar here, and you're failing off this big, ugly cup with handle formation. It's wide, and it's loose, and it's pretty ugly looking. So I think it's failure prone. As far as Splunk goes, let's see. Oh, it's dying a miserable death. It's red now, so that's not really working out. But it's hanging. I guess it's just hanging even right now, 69.65 bid, but you know, near the lows of the range, and so it's looking a little bit grim here. And I just keep an eye on this. I think we've been watching these for a while and thinking they could be forming big pods. At this point, I wouldn't call this a pod either, because it's essentially a big, ugly cup with handles trying to break out. And if it fails here, that's pretty much a short. And next stop would be the 50-day moving average. But I'd kind of let it play out today and see where it ends up. You could have hit it this morning, however, on your 620 chart. Let me pick that up. Yeah, there it is, right there, right at the opening just about, and things just kind of tanked, and it's really not looking back, trying to bounce here. But it's on top of the base here, so I would expect maybe some kind of a bounce. Watch a rally back up into the 20-period line, the blue line here, and maybe that's where it becomes shortable. But for the most part, I think the market's in a position. Let's look at the NASDAQ. You've been up. This day's actually not an update here. That was 3 days ago on Wednesday. But I color-coded blue because it opened here and closed here. So it closed higher than it opened, but it did close down for the day. So volume was up slightly that day. And then yesterday you were up on pretty good volume, and it was a pretty strong-looking day. But if you look at some of the stocks, and you look at the advanced decline line, it wasn't that powerful. So you do get a sense that you're slowing down a bit here. And it makes sense given the way that the market's acted throughout this whole QE environment. And as you all know, back in 2013, I shifted my tactics in the market to playing it more on a swing trade basis and looking to buy stocks on weakness, constructive weakness, and then coming after them, or rather selling them into the rallies. And sometimes if I'm working something on the long side, I may flip on the short side and catch some on a pullback. So, you know, that said, I can do things like Facebook, for example, breaking out of a cup with handle. Now, the problem with this is if you call this a cup with handle, your handle's 1, 2, 3, 4 days long. That to me is not sufficient. And so when it jacked up yesterday and got near the highs, I thought that was something to sell into. And of course, here we come. And then I might even flip and go short the stock. But I didn't do that in this case. But there are instances where I'll do that. Grubhub was another one. You know, it's on the cover, or rather the front page of IBD. You've got two other firms putting out buy recommendations on the stock. And again, it is a short 2-week handle, roughly, and it tries to break out and they hammer it back down. The volume, what surprised me here is you had strong volume on Wednesday, and not, you know, it's above average, but it wasn't really huge volume, and they reversed it pretty good yesterday. And to me, that speaks of just buyers going on strike, essentially, and not really getting interested in the breakout. And I think the problem here is that that's really what it looks like on a weekly chart. So you have a 1-week handle, really, and then it tries to break out here. I think, given all this work and see how loose it is in here, it needs to set up and get tight. So I'd just be watching this and at this point, seeing how it holds up here. I think it needs to build a more substantial handle. So I'm kind of watching this thing as it comes into the 10-day, perhaps. If the market comes off a little bit more, we'll see what happens. But that's basically my approach. Someone's asking, Taser short. Maybe. I can't borrow it, so I don't really mess with it, but it's kind of down there. Pretty surprising, actually. I was expecting these guys to be a potential viable gap up. I wasn't going to buy the stock going into earnings because I thought it was a little dicey, because it appeared to me that there was no real conviction going into earnings. And in fact, we saw volume pick up slightly on Wednesday, and stock closed down, held the 20-day and the 10-day roughly, but before earnings, it basically was not showing any strength. And we know that their costs are increasing because they're trying to meet all this demand that they're getting from all these new orders. So you can see how that's played out, and that's basically what they announced, is that they're going to be increasing their costs. And that is going to impact earnings in the short term, and in this market, that's basically a recipe for death, and that's what happened. And so they hammer this thing on massive volume. I think it's done, and that would be considered the break off the peak. So now what you're really looking for, if you wanted to short, I guess you could try and short it here using the high of the day at 23.93 as an upside stop, but it could rally back to the 50-day, and that might be something to watch for. So let's see, just watching some of these things trading this morning. I see Twitter's gone red, LinkedIn has gone red, Facebook is now down 64 cents after they jacked it above 81 on the opening. It's probably your last chance to sell it if you're playing it on a swing trade basis, which that's how I operate in this market. And you're basically bobbing and weaving and looking for swing trades on the long side of 10, 15%. You stack those up and you're starting to do pretty well, while you're looking for that 1 or 2 stocks that's really going to have some velocity on the upside, like Cyber. So Cyber came and went, and it's basically trying to consolidate here as it holds along the 10-day line. I think it's a little bit too soon. You can see it is trying to hold today, and I think volume is up on the stock 365% up. So it's actually trying to hold, but I think it's a little bit too soon here. It needs probably to go sideways, and the 10-day line needs to flatten out. But you know, if you want to try and buy here, I suppose you could, using the low of the day as a quick stop, or the 10-day. But to me, you know, the fat part of the move occurred, and you take that and you hang out and you wait for the next one. And I think you will see the next one eventually. I don't know when that's going to occur, but it's definitely not happening right now. Cyber filed for a 200 million share offering. I speculated they might. I've also speculated that Data may be looking to file a secondary based on the way you've been seeing it get sold into the 200-day line. And that's, like I said, that's another one I'm short here, based on Livermore's century mark rule in reverse. So basically, I sold my longs. I had 4 or 5 longs. I sold them yesterday into the jack and flipped short on some things that I saw just because I think the market is coming in. This is an interesting new name, Hortonworks. I tried playing this one, but it really can't hold the 10-day, so I'm not messing with it. It's also kind of thin and squirrely. But this is sort of an interesting pattern among the new IPOs. Shake Shack Also had a pocket pivot here, but it's not holding. It's another thinny. They're losing money though. I'm not sure how you lose money selling burgers and shakes, but I guess these guys have figured out how to do that. But it is trying to round out some kind of base. I just don't know if it's the big stock type of name that you're looking for. Some other IPOs. Momo, I love that name. I mean, this thing's got to go higher with a symbol like that, right? Momo. Pocket pivot down here on a roundabout, I believe. 1, 2, 3, 4. Yeah, close enough. Yeah, if you get a pocket pivot on the 9th day, that to me that's okay, especially within the context of a volume dry up on a pullback to the 10-day. I don't, to be honest, I don't really use pocket pivots. I think that in this market you're late. And I don't like to buy strength, and I prefer to buy the voodoo or the volume dry up pullbacks to the 10-day lines or the 20-day lines or the 50-day lines rather than chasing strength. I think that's a fool's game in this market, and as you all know, I think if you don't adapt and alter your tactics, you just get chopped up in this market, and that's basically the bottom line. Some other questions real quick before I get into looking at what's going on today. Freescale, well, they talked about going private or having someone buy them out, holding along the 10-day, pretty tight. I don't know. I don't know why you have to ask me about it. You can see what's happening. If it's drying up, maybe it's viable along the 10-day line. That's a possibility. VIPs. This thing had the Bible gap up, but this is like a lot of these Bible gap ups you're seeing. Cyber is probably one of the rare examples of one that got a lot of velocity on the upside, but most of them you see them gap up and they run up a little bit and they're going sideways. That was Data did that. LinkedIn, same thing, and it's kind of flopping around. Tried to pocket pivot yesterday, but closed at the lows of the range. And so I categorize VIPs similarly, and holding along the 10-day if you wanted to try and buy it. But the other thing to think about here is I find that buyable gap ups work best when a stock is nearer to the beginning of a potentially big run. So like Cyber, for example, here, I'll get this typed in correctly eventually. Cyber, for example, coming out of here, this is pretty new. It's relatively fresh. Whereas you look at VIPs, and this thing's been going for a while, and so this is a little bit late, and so I'm a little suspicious of these types of buyable gap ups. And you'll see they don't get a lot of upside velocity. You might get a move for 2 or 3 days, and I think that's very playable as a swing trade, but that's about all you get. Somebody comments, I have loved the way you trade, buying dips and selling short rallies. Not really what you espouse in your book. Well, that book was written in 2010, and as I said, you have to adapt your techniques. The next book that I'm already outlining is going to cover a lot of the newer techniques that I use, and I think a lot of this is just adaptation to a QE market. So in the same way that I criticize IBD for being very rigid with their CAN-SLIM types of rules and their lack of adaptation to what's going on in this market and how it operates, the same goes true, or the same holds true for our book back in 2010. The pocket pivots and the viable gap ups are still viable buy points, so all of that still works. It's really more a matter of the tactical approach that one uses, and I think that needs to be altered in this type of environment. Otherwise, you just watch gains fritter away. And rather than doing that, it's much better to take your 15, 20, 25% gain, maybe 30, 40, 50 if you get it like in something like CyberArk, and put it in the bank and then go back and start looking for the next setups. So there's really not a whole lot of difference from what the first book talks about in terms of the basic entry points, because I've always advocated using voodoo pullbacks into moving averages as a technique for buying stocks, and that's been my favorite way of operating, especially in this market. So again, what somebody writes in a book 5 years ago can become irrelevant very quickly, and unless you continually adapt and refine and update your methods, I think you have trouble making progress over the longer haul in this type of market. Someday we may go back to a normal type of market where you can hold things for better trending moves, but I don't think you're in that type of an environment these days. And the proof in the pudding is what actually happens in practice. And doing 115% last year sort of proves out my methods as far as I'm concerned. So, but anyways, as a person points out, not really what you espouse in your book, but who cares? It's working. Yeah, and as I pointed out, you have to adapt. Pocket pivots, question mark, mixed results. Good for building watch lists, but late for trading in this market. Need to be more anticipatory. Precisely. What I like to do, for example, the pocket pivot is valid in the sense that it highlights something to keep an eye on. So, for example, here's a very subtle pocket pivot right here on the LCI back on January 20th, right at the lows, near the lows of the base, is trying to round out. And then that doesn't really lead to anything, but you can see as it pulls in here and the volume dries up, then you could start thinking about maybe testing a position on the long side. Same thing here. Here's a Bible gap up sort of move, but really I'd look at it more as a pocket pivot off the 50-day. And then you use a pullback where it gets some support along the 10-day line and comes into the 20-day line here on lighter volume as your potential entry point. Once you get in there, you got this Bible gap up, and then you're off to the races. And I think that's really the way to operate. So the pocket pivots in and of themselves are not invalidated. It's how you use them and your tactics and your methodology in using that information as a way to identify something that then can be played or bought on a pullback, on a constructive voodoo type of pullback. I think the voodoo setup is a very valid and useful setup in this market. Let's see, box. I'm going to go through some questions. Then we're going to run through the list. I'm going to update my HDSI. Box is another new IPO, but there's nothing going on here. I would leave it alone unless you start to see something constructive. You notice downside volume picks up a little bit here. It's the same thing I don't like here on this HDP. See the volume, downside volume picking up here. It's trying to hold, and it may set up because you did have a pocket pivot here. This is not a pocket pivot because the volume that you see is accumulated after hours when they announce earnings, and so that's not really what it was during the trading day. But this was a pocket pivot. It's trying to hold in here. Maybe it does. Possibly something to keep an eye on. But that's not, I don't see where you see the, let's see, the voodoo on the, not really. It really depends on what the volume levels look like today. But you can see, like I said, the volume picked up on this day. So that's not drying up. It's actually picking up. So that's not really voodoo. Anyways, keep practicing, though. You'll get it eventually. VA, this is what I call a POS, and I won't, piece of, and then you can figure out what the S stands for. But it's pulling back into the 20-day line. I think this may try and turn, but the airlines are under a little bit of pressure here. For example, Love, is, you can see it pulling in. You look at Delta pulling in. Alaska Airlines is pulling in a little bit. You notice they're all in similar positions, and I think that's because some of the airlines are on high alert right now for a potential terrorist attack. And of course, if you saw that, I think that would affect the airlines. If it occurred on a jetliner, I think that would affect the airlines pretty badly. But I would be watching this. This is still trying to hang in there. But the only problem here is that rather than drying up, if I blow this up, you can see the volume picking up yesterday when it was down. That's not what you want to see, okay? So when you start seeing that sort of action, that's not voodoo action, and that's not the type of thing we want to look to buy into. So I actually bought a little bit in here, and you had a nice move in here, and I kept selling it at the 37 level and then buying it back at around 36, and it did that a couple times, and then finally I bought it again on this pullback, and the next day it turned red, and I just dumped it. It probably needs more time. If you look at it on a weekly chart, the other option here is that what you're looking at is a head and shoulders, left shoulder, head. You got some heavy volume to define the right side of the head, and now you're forming a right shoulder. So yeah, that could be trouble. So these could work out either way. You know, it could be a roundabout, or it could be setting up as a head and shoulders, and I think you have to be open to that either way. Markets, let's see, we're down. Well, we're down across the board. I don't know. Let's check our volume levels on the day. Volume is lighter today versus yesterday at the same time. It could pick up, but I think you're seeing some names. The thing I look for is if the market's going to roll over, and you'll see this every time. When the market tops out at a peak, you'll start to see things setting up on the short side. And I would say right now we got workday as a pod, or actually let's just call it, I'm not going to say pod. That's actually the wrong terminology. I used to call them pods, but then I figured out that it's really, what's in the label anyways. But I think this potentially a big, ugly cup with handle. If we look at it longer term, you can see the stock's already had a big move. And then it sets up in this pattern, and now it's starting to reverse. And to me, that looks like death. So we have workday, that's a setup, and that's setting up as a failed breakout, so it's a pod or late stage failed base that's somewhat pod-like in the sense that it's a big bowl formation with a handle. And then you have Splunk now is getting weaker, so it's turned red. That's probably a clear short. If it turns positive, you cover. So you're down $1.35 now, so that thing's dying rapidly. So this potentially is the same situation. It had a big run, and you have a cup with handle formation where you are now failing on a breakout from the handle. You could even call this a base. The thing's a 15-week base on heavy volume. Okay, so there you go. You're starting to see some failures here that may be a clue that the market is coming in, at least coming in for a nice little correction that will also give you some short sale targets that pop up on your screens or on my screens. And you guys see them here, I guess, however you want to operate there. But that's what I'm starting to pick up. So it's clear that you've got some issues here, and the market is looking a little bit shaky, and you've got some short sale targets, and some of the leading stocks have run up, and everybody's positive, and IBD's talking about how great the market is, and even Dr. K sees the market as very positive and constructive because there's all these names looking good. But when things start to look too good, that's when I get a little bit cautious here. So, but again, my method of operating where I sell into the upside moves naturally takes me out and bags my profits for me. So it gets me out of the way of any sort of pullback when everything looks good and the crowd can see that everything looks good. Let's go. Somebody says, this is what I love. You have adapted and always adapt. Well, yeah, and you get whacked around. Where's Dr. K? He's out today. And most of you have already emailed us telling, or a lot of you have emailed us telling us you like this kind of format. So in my view, the market is all about where the rubber meets the road. And talking about high concepts like what the Fed is doing and what commodities are doing and what the weather is like is completely useless. It's a very concrete process in my view, so it comes down to a very simple matter of what is happening right now, what is actionable. And if there isn't anything actionable, then that also is telling you something. But I think right now what I'm seeing is actionable is stuff on the short side. I'm getting a little pissed off that I didn't hit the Splunk around 73 this morning when I saw it roll. It's now getting hammered down $2. But you know what? That's going to take data down, and I'm in that one. So I wouldn't be surprised if this turkey tested the BGU low down around 90. What is that? Well, it's already testing the BGU low at 95.16, but this pullback here at 91.63, and I wouldn't be surprised because this is the same situation. You can see that. That's kind of pod-like because of the steepness of the rise, but it doesn't really mirror this one. There's no symmetry here, so you can see the break was very sharp, and then you've rallied all the way back up to the highs, and so in a sense it has that pod look. But again, you could simply call this a big, ugly cup with handle formation. You have a breakout attempt here. Where it becomes officially shortable is once you see it bust the 20-day, which I'm anticipating that's going to happen. We'll see. I mean, I could be wrong. I don't have to be right all the time, and I'm usually not anyways, so it doesn't keep you from making a lot of money, however. So don't be afraid to be wrong. You know, if you see something you want to take a trade, go for it. Just know where your stop is and stick to it. It's pretty simple. Ain't rocket science, although some people out there will have you believe it is. Basically common sense and operating on the basis of a well-considered methodology or approach. Anyway, so this could be a failure. I would look at usually the first sign that they're breaking out is they bust the 20-day. So to me, though, you've got a combination of things going on here. You have the big late-stage ugly cup with handle or pod-like formation with handle, whatever you want to call it. But you also have the failure at the 100 price level. So Livermore's rule, remember when he talks about, and Anaconda Copper back in, I forget the year, 1906, 1907, and he's shorting the stock, or he's going long the stock as it's coming up through 300, and it runs up to like 308, 309, and then it reverses back to 302, and he writes in Reminiscences of a Stock Operator that he felt that if it couldn't hold 302 that the movement was false, and he reversed and went short, and sure enough the stock broke down. So he never talks about using, he talks about the century mark rule on the long side, but he never talks about it specifically on the short side. I sort of extrapolated that from what he talks about in the way that he handled Anaconda Copper back then. And so I basically have turned that into the Livermore century mark rule in reverse, short sales setup, and that's what you're looking at potentially here with data. Workday never quite got there. Got close, but not quite. And so that's the drill on that. So GMCR on the short side, let's take a look. It's looking a little bit head. This is, you would say this break would be the right side of a head. Running into the 50-day, you've got a black cross here. Let me make this a little bigger. You got your black cross where the 10-week line drops below. So yeah, and you're coming up into this area here, and that is going to be an area of overhead resistance. So I think that in this case, it could potentially be shorted here. Maybe let it come a little bit higher. Did they already come out with it? They did, didn't they? Yeah. Let's see. Workday trying to bust 87. Data now 95.50, pushing down a couple of bucks along with Spelunk. Somebody says, like our flexibility, still learning to do that. Well, I think one of the issues here for people who have real jobs and have to be at work during the day, which, there was a time many years ago that I had a similar situation, and but I was a broker, so I could watch the market. But I would say, you can set targets and automatic stops, sell stops on the upside for positions and on the downside, but still, I don't necessarily think you need to be staring at the screen all day. What I think you need to do is outline where your profit objectives are, where your stops are, and then you might be able to enter in orders. Although I don't personally like to operate this way, but I understand if somebody has a real job and they can't watch the screen all the time, then you enter in your orders with respect to where you're going to take profits and where your stop is, and let them run that way. That's one way to handle it. Or once you have a stock that's moving higher, say 10, 15, 20%, then figure out where your trailing stop is and then put that in automatically so that you do lock in the profit just in case the thing pulls in on you. So I think, we're going to, in my next book, I'm going to talk about that in greater detail and different methods that one might be able to use in a swing trading environment, because I think you can use swing trading in pretty much any environment, and I think it's more appropriate to the current environment. So that's okay, Gar. You can call it R flexibility if you want, if you're implementing it too. All right, let's go to our handy dandy. You know what? I need to take a quick break real quick. My wife just bought some new coffee, and I've had a couple of cups, so I'm going to have to take like a 20-second break here, maybe a little bit longer. So just hang loose. I'll be right back. I'm back. Let's see. Let's see. Dow's trying to rally back. S&P is up. Grubhub hanging in there. Some of the solars are hanging in there. I've been, remember last week, if you recall, last Friday, I talked about watching these solars, the way they're acting. You're getting some pocket pivots. They're hanging out. And here you had a little pullback into the 10-day, but it wasn't a voodoo pullback, but it did come to the top of this range here and closed about mid-range on the day. But if you had bought that on that suggestion, you might have been able to catch this. Now the thing is, are these viable gap ups? Well, that's what the pattern looks like on a weekly on SunPower, for example. And this is teamed up with First Solar, and they're going to issue a joint yield co, which is basically a publicly traded company that's designed to hold yield-producing or revenue-producing assets. So I guess you're going to team up to do that, and that's what caused the gap up. Then they announced earnings this day after the close, and SunPower moved higher, but it's sort of fluttering around the 200-day, but it may still be okay. I think using maybe the low here, 31.61. First Solar is another one, so you could try and buy that in there. That looks like it might be okay. First Solar, this gapped up, hit the 200-day, and closed at the lows, but then after earnings it gapped up again, and now it's above the 200-day. Now if it pulled in on a voodoo type move into the 200-day at 57.61, maybe it would be viable. I think it's running out of gas here, so I just kind of keep an eye on it and see if it pulls in. I still think we're coming in a little more, just based on the broad action here. I see Grubhub acting okay, and that looks decent. Let's update HCSI. We're going to do our little exercise. Cyber coming back. That thing was down, basically down on the day. Well, I think it opened up around 59 and change. Now we're up $1.15 here. Some other names. Okay, here we go. Look at our warehouse. So I call this list G. It's a G $, G money. That's my nickname. Some of you know that. But anyways, let's look at. Let's go to. I'll go to this one. I like this one. Ron Brown made this for me, and I like it because it shows pocket pivots. Roby Corporation today. Look at that big volume. But so we're going to blast through this list. We're using a filter here of price up with minimum volume, and for me, minimum volume is 350,000 shares a day. Other than that, I'm not discriminating. I'm not requiring a certain ERG rating, which is comparable to the composite rating that O'Neill has. Bank, Royal Bank of Canada, blah blah. Okay, Royal Dutch Shell, whoopie-doo. Royal Gold. Gold stock's moving up. I wonder if that's telling you anything. Let's see if we see any more of those. Nothing exciting there. Ruckus Wireless. I always like that name. Russia Bull 3. This thing's moving today. You get some ETFs in here, but for the most part, we just fly through this. I hope you guys are a lot of you guys using this and doing this same sort of exercise. So you can see I'm just flying through this. You see some stuff up on volume right now, but you know we're down to Schlumberger now. Where's Schlumberger? Is this? Am I actually going through this list? Okay, something happened there. I'm not sure what it was, but let's go. Digital Globe. I remember this one from a long time ago. It's breaking out on huge volume, kind of extended. Second size, interesting. It had this turn finally. I guess they announced that they had some success with their products in France, and that caused this big pocket pivot type move. That's the sort of move I might look at buying into, but it's kind of risky, and the thing's pretty volatile, but it's trying to round out. So I think this would probably bear watching in terms of coming up with a new buy signal. So, okay. Bible Gap. Monster on a Bible Gap. I think we put a report out on that. Bloomin' Brands trying to move higher. There's some stocks moving. It's sort of a mixed bag. You know, you got some things trying to rally, some things getting kicked around, some things rallying and then getting kicked around. Zeltic down $1 today, I noticed. That's not so hot. Ross Stores on a gap up, but it's near the low of the day. Here's some other stuff coming around. A little of this, little of that. What was this? Cyberonics, I guess anything with cyber in it these days is looking good. There was a gap up, but I think kind of in a weird position trying to come up out of this big cup, so I'm not so sure I'm into that. Gap trying to move up. Can't say I'm all that impressed here. I like the way Grub is holding up this morning. That's constructive. Lumber liquidators. A lot of these are just stuff trying to come up off the bottom, as you can see. So it kind of junky. If you got any questions, feel free to spew them. So we're just going to fly through the CyberArk again, now holding up at the 10-day. So that's working out so far, but it needs a lot of volume to flash a pocket pivot. So I think if you're going to come after this here, I suppose you could, but it's not clear to me that it's necessarily going to fly out of here. Mostly junk off the bottom. You can see that. There's a few things acting okay, but Global Eagle trying to come up. Gogo's been turning. I'll look at that a little later once we get through all this. But you know, just flying through this, we can see that you're not seeing a lot of real exciting stuff. Maybe this changes later on in the day, so you definitely want to, if you've got this, you want to be running it during the day several times and running through the list. These are low ERG stocks, so some of these, ERG 185, this is a good one. Palo Alto Networks, you know, coming in. Just a pinch, nothing exciting here. They come out with earnings next week. But again, you see as we're going through, most of the stuff that's up on volume is junk. So that's giving you a little bit of a flavor. The leading stocks look like they're taking a break. I see Facebook now down 75 cents, Twitter down 37 cents, LinkedIn now down $1.78. Even my ZTS, I went long that right at the 10-day last couple, 3 days ago, and it ran up this morning, dumped it. Now it's pulling in. The solars have a nice little move, but I think they're done for now. Don't own those. I don't have any longs right now, just so y'all know. Nothing. EPAM, that one's acting okay, but it's extended. Look at this. It's just junky stuff. I'm just going to fly through the whole list here and see what we see. But this is everything that's trading up on volume. Sprouts trying to bounce. That one catches my eye simply because I shop there. It's kind of like, I don't know if anybody's familiar with Trader Joe's, but it's sort of like Trader Joe's meets Whole Foods. Great prices, great stuff, what you're looking for, and it's not a big, huge complex like Whole Foods is. Whole Foods is also, I don't know, kind of goofy. It's a favorite hangout for white liberals in West LA, so. Nothing. American Tower, trying to come up. You had a pocket pivot here. Earnings come out in May, I guess. Trying to turn, I don't know. This looks sketchy to me. Grubhub pushing higher, I see now. 42.51. Here's a viable gap up on Celdex, another money-losing biotech. So it's held. Going to, it looks okay. Possibly viable using that intraday low on the BGU as your stop. Yeah, there you go. So I see some questions coming up now. So we'll get to those after we run through our list here. Kind of junky. See Workday. Let's see if it's bus 8701. Let's see if it's bus 87 rather. It's trading bid 8701. I think most of these things that are up, like Grub, I see is up 86 cents. I don't think it'll hold. I think the market's coming in a little bit more. Workday now below 87, just noticing. Other stock I think is shortable is Baidu. CMG also might be shortable. Chipotle. We'll take a look at some of these in just a second here. What time is it? 7:40. So we got 20 minutes. You really get a sense, though, that there's nothing or very little that's looking good here. Let's, I think we're going to punt this list now. I'll go to my current buy list. Buy watch list would be here. Then we can take the filter off, so no filter, and then click OK. And we can look at here is, again, we look at my list, what's really moving. Eyes is moving, CDK, Tasers actually trying to rally. It's up, just up a pinch here, but volume's heavy. Zyop is moving. That's one I've been talking about watching. They're allied with Intrexon, which has been acting well. But let's just flip through these real quick. So here's second side's running up on most volume. So that's maybe trying to set up, and I think that's something to keep an eye on. If you didn't catch the turn, that's okay. It will set up at some point. Cybrock hanging in there pretty well. Paycom is a new name. I sort of like this pullback. You saw volume pick up yesterday, and volume was heavier, but it closed at the peak of the range. See, if you're going to pull back like that, that would sort of negate the fact that the volume picked up on the downside because it was able to close near the peak of the range. And then it comes up through the 10-day line. It may actually be, for this time of the day, it's only 7:42. So you're looking at volume here is already more than half of this, and you're only about an hour into the trading day. So it's telling you you're already potentially setting up for a pocket pivot here. It's a smaller stock, trades 464,000 shares. You can see that up here. And interesting name, I think. Here's our Shake Shack, trying to hold the 10-day. Avago, Bible gap up, holding up well. This will be interesting to see whether this thing actually gets any upside juice from here. And I guess we'll find out. But again, you have a stock, it's in a shallow uptrend channel, and then you get a Bible gap up, which would have worked yesterday if you were able to pick it off near the lows. Now it's holding in tight, and I'd like to see this thing try and move higher. But like I said, you have not seen many of these Bible gap ups show a lot of upside thrust. Palo Alto Networks, again, Facebook coming in. Volume is running, well, it's running 100, and according to this, 117% above average for this time of the day. So they're actually selling it. So it's falling back into the handle. I think maybe if it met up with the 10-day, that's where it would become viable. But we really have to see how the sell-off or pullback, so far it's just a pullback in the index, and see how this thing pans out. Apple, it had a pocket pivot yesterday. You can see how that turns nice and blue here. Mercado Libre. Tessera, we've been talking about this, is holding along the 10-day, but nothing moving yet here. Variant coming up. Data is it's starting to get some red in here on the short-term bongo and the short-term force, but net kind of, I don't know, kind of, to me this thing looks like it's short more than anything. So, and it's coming in, actually kissing the lows of the day right here, I believe. Yeah, more or less. Starbucks has acted real well. It's coming in. It's going to come in. Zelti kind of eating it now. Earnings coming out, I think, on Monday or Tuesday. Yeah, on Tuesday. And it's kind of rolling over. So, yeah, some of these stocks that have been acting well, you see them act well for a little while, and then, boom, they start to hit them. And I think that's a problem. SunPower trying to hold up, but nothing thrilling there. First Solar, we looked at that. Netflix also continues to hold up okay. Jose Cuervo, that had pocket pivot here, yanks in. This thing seems like you had to buy it on pullbacks, but it's trying to turn here. And you get another pocket pivot on this little range breakout. So that's acting okay, pulling in on... right now, 25% increase in volume, so it's a little heavier, but it's close. It's about mid-range, so it's trying to hang in there. Intrexon is hanging along the 10-day line. Home Depot, another name. Twitter had a pocket pivot yesterday, but it ain't going anywhere, and it stalled out yesterday. Again, here's a gap-up type move, and then it just takes so long to get anywhere. GoGo, I like GoGo. We talked about it when it was down here last week, and that we had a pocket pivot in here. to me that it looks viable, and I think it's probably starting to come into its own, so I'd be watching this on a longer term basis. You know, the pullback in here, you're probably going to settle in here, 10-day catches up, and then watch and see how this thing acts. But it looks constructive to me. Skyworks, we talked about this last week as well, that this looked like it wanted to come off of here, and it is. Avago's earnings also helped to propel that. Electronic Arts just hanging along. Here's one. Relipsa, a little biotech, hanging in very tight here. This looks interesting, like it might want to move higher. It's a thin stock, trades just under 500,000 a day. Let's look at FireEye. Actually, it's holding in too, but it's kind of up there. Needs to catch up at the 10-day. El Pollo Loco trying to turn, and I guess earnings don't come out till middle of March, but it's trying to set up in there. You've been seeing things like Jack in the Box working. JetBlue is kind of flopping around with the rest of the airlines. Ambarella made a nice comeback on a 5-day pocket pivot here, I believe. And it's trying to move higher. Earnings come out next Tuesday, so I don't know what's going to happen at that point. But with GoPro getting smashed, I don't know. Not sure I'd want to stick my neck out on that. Atlanta—it's just up there and it needs to pull back. MasterCard is up there and it's pulling back. And you can see the general theme here is that you've got these stocks that have run up, and some of them are pulling back, trying to consolidate, and that kind of fits in with the overall situation in terms of the indexes being extended. So LinkedIn just trying to hang along the 10-day line. You can see how everything just updated here. I have it on automatic update, and I guess it does do that. So X-Ray is an interesting roundabout. You got a number of pocket pivots coming up through here. And it looks to me like it's trying to go higher. Dentsply International, I forget what they do, but we can check the description here. Dental consumable and laboratory products and dental equipment. So looks interesting. Earnings a little bit uneven, but the pattern looks pretty good. That might be something to keep an eye on. Cypress, they're merging with Code expansion, so that they're both hanging. They look the same. Grubhub trying to come up. Doesn't look too bad. But I still think it's going to need to back and fill a little bit in here and let the 10-day line catch up. Viva pulling in. That's a little bit back and forth. Barracuda trying to come around again. You notice setting up in a cup with handle, so as it pulls in along the 10-day, you want to keep an eye on that. Whoops. What do I do here? Momo coming in hard. Forget that one, huh? Vasco Data. I'm not sure what to make of this one. I thought it would hold the 10-day, and I bought some here along the lows, and then it didn't hold. It kind of reversed here, so I just sold it. And now it's bouncing off the 50-day, but there's no real volume in here. Today we're trading 20% below average, so you're not really getting any thrust off the 50-day moving average. But you know, maybe this tries to set up. If we look at, let's go File New, and look at a weekly chart here. So let's go to my standard weekly chart, clean weekly chart. That's what it looks like on a weekly chart. Can blow it up, and you know, you could consider this something of a support week because you did close kind of mid-range, and it does have some overhead on the left side, and maybe if it sets up and gets tight, it's able to come out. I think the whole cybersecurity area is still an area to watch, and I think that there will continue to be strong movement in those names if the market continues in an uptrend. If it doesn't, of course, that's another story, but I think that's an area that you definitely want to be aware of what all the names are doing in that group. And I would say you got Vasco, you got CyberArk, you got Palo Alto Networks, you have this smaller one, Qualys, QLYS, you have also Barracuda Networks, which is trying to come back. But you know, the smaller ones like Qualys and Barracuda are squirrely and thinner. So BioMarin, pocket pivot here, hanging tight. Maybe this one goes higher. Celgene, I notice is looking like it's trying to set up, and maybe you see some rotation back into some of these names. This has been basing, so it looks like it might want to come out of here. Hortonworks trying to hold up. We looked at that earlier. I think it's an interesting idea. New company. Here's Zio. This is a relatively new company as well. Came public back here in it looks like late September or early October of last year. But trying to set up, you see in a base. They came out with a secondary offering. I would keep an eye on this one once they price the secondary. This is provider of bandwidth infrastructure services, including dark fiber, wavelength, SONET, etc. You can read that for yourself if you have this system. But that's a interesting area. So I think it might be worth watching. Building a base just below the 50-day. Theoretically violated the 50-day. But notice how this line here, the 65-day exponential, is holding. Let's go. Let's cruise on through. Disney is another one of those slow buyable gaps. Visa looks like it's trying to go higher. I mean, I thought this was a short previously, but it came up and out of here on a pocket pivot, and it's looking okay. Love is not getting any love. Zetas pulling back in. Had a nice move yesterday. I don't know. That was a day trade. Canadian Solar is another one of these solars that's trying to move higher. Notice how it's pulling back into the 10-day. Earnings come out next week, I think later in the week at 3-5, which would be, let's see, 2, 3, 4, that Thursday. And you're pulling into the 10-day on very light volume. The solars are acting well. These guys actually don't have bad earnings. I think they're actually, you get $1.36 for the next quarter. And if we go, we're going to go, well, I'm going to flip through this. We'll look at some other ones. Expedia coming in. Spirit coming in, and nothing. Things just kind of coming in, and it's basically what you got going on here. CommScope's interesting. You had a pocket pivot in here. They came out with earnings, tried to sell off, and it's been holding the 10-day. I think they're in similar business to ATM. There's Virgin trying to hold up today. Data making new lows, I just noticed. Juno. It reminds me of when I was growing up. I had a friend down the street. He's Puerto Rican, and I actually grew up on a street with every conceivable ethnic group. We had a black family, a Dominican family from the Dominican Republic. We had Puerto Ricans. We had Japanese. We had Koreans, and basic Northern European types. We had Mexicans. Pretty well mixed up. So back in those days, I guess I lived in diversity and didn't know it because it wasn't politically correct back then. But in any case, Juno, she reminds me what she always used to say now, Juno, this guy? So that's what I think about when I see that. You have a pocket pivot here and you're trying to move up. This is an interesting biotech, losing money, but the technicals here look interesting. Here's this one, AVOL, somebody mentioned on the chat room, I think. I think that was you, Scotty, wasn't it? Fibergen coming around. And that's pretty much it. So a little of this, a little of that. I like being short here today, and then we'll see what happens on some of these pullbacks. I may want to flip back into the long side. Okay, but let's, we can set this aside and look at some more charts on some of these questions. Flipping back up. FLTX. Well, this one's extended. It's a breakout on huge volume, and that's what it looks like. Big ugly cup with handle. I don't know. If it's a breakout and it's not extended and you want to buy it, I guess you could, but it looks to me like it's extended. So, not sure what I'm supposed to tell you about it. Otherwise, Ziop, I already talked about this as being buyable. You had a pocket pivot last week. We saw this as it pulled into the 10-day, and we talked about this last week, or I talked about it last week, as being a stock that's starting to grow up. And one of the things working in its favor now is the fact that it's above $10. And a lot of institutions, and I know this varies to some extent, a lot of institutions like to or are not allowed to buy stocks that are above or below $10. And so once it gets above 10, it becomes more viable. I know that they're working on, at least according to what my urologist told me, they're working on new substitutes for antibiotics to fight bacteria and infections. So that's still looking good. Somebody says, I bought in quantity at 10.15, sold yesterday for 11, now see if it holds a 10-day. Any thoughts on this stock? Well, nothing different than what I said before. So I like your strategy, though, taking a 20%, 15-20% profit and selling into it, or if you bought right around here, taking that profit, because now it comes in, and I think it either is going to come into the top of this, if you draw a line across the top here, you might pull into this top of this trend channel here, or maybe the 10-day, but it looks okay to me. I like the way this thing looks. Let's see, what do we got here? Cuervo pulled into the confluence of the 10, 20, and 50 earlier this week and bounced. Okay, I believe you. TSEM did move up on earnings, gap up on 223, but let's see, Jose Cuervo, as I like to call it. Yeah, it bounced here yesterday, and so, yeah, it could have been bought. It's trying to round, that's what it looks like on a weekly chart, but this is also the merger between TriQuint and RF micro devices, and so it's just flopping around. I don't know. I don't know if I'd buy it here. I think you have to buy it on weakness, but looking good. And TSCM gaps up on earnings, but I don't know. It's stalling a little bit. It's wedging higher, and it's a $16 stock. I don't really like this. How are you determining the volume percent above yesterday on HCSI? Well, I suppose it's a good question, but it's on this list, and right here you see this column, intraday percentage volume, 50-day. So it's the percentage increase over the 50-day moving average of volume for this time of the day. And so you look here on this column, and it's showing me, of all the stocks I have on my list today, Second Sight Medical is moving on a 2,822.9% increase in volume. CDK Global is rallying slightly, but Taser is trying to rally, but it looks like it's going to fail. The one that catches my eye the most here is just Paycom, because I think it's going to have a pocket pivot. And I don't know, I've been thinking about maybe buying a little bit of this. It's a little squirrely, but it looks like it's going to have a pocket pivot. Nancy, 1, 2, 3, 4, 5. Yeah, if it exceeds, you can set an alert if you have volume alerts, 418, 30, so 440. If it goes above 441,000 shares roughly today, and we're already trading, let's see, we're already trading 359,000 at almost 8 o'clock, an hour and a half in the trade. It's probably going higher. So that looks good. Worth a whack. So you guys start buying it. It's thin, so you can run it up a couple of bucks. Let me buy some first, though, okay? So, let's see here. Somebody says, interesting to note that Cuervo found support at the 65 DMA twice. Yeah, the 65-day moving average I find is more valid than the 50-day, and a lot of times, like, you can see that that a stock will. Well, let's go. Let's put these away for now. Why don't I have a 65-day on here? Okay, let me throw it on. We want that to be an exponential moving average. We'll make it. I like to make it black. Make it a little thick so everybody can see it here. How's that? And oh, I know why it doesn't have one. But so, but notice how it violates. Well, actually, you know what? You can't really do this here, but. So I'm not even sure where you're getting the 65-day moving average, because it hasn't traded 65 days unless you count. Somebody's got the action of the prior stocks, which I'm not sure how you put a chart together of RFMD and TriQuint to do that. But if you look at other names like yeah, that's not one. But a lot of times what you'll see happen is that you'll see a stock pull down, like even here. Violate the 50-day and hold the 65-day exponential, and you see that happen, and that's why I think just using a violation of the 50-day moving average has become old hat, and because everybody looks at a 50-day moving average. So now what happens is the crowd uses that as their stop out point, and it skids a little bit further past to the 65-day. So. W. Somebody's asking about W. What is W? Wayfair. That's a new issue, so I like that aspect. It's trying to turn. So you got some pocket pivot type action here, and you're drawing up on the pullback to the 10-day. So it's looking like it's trying to turn. What do these guys do? Let's take a look. Well, same to you. Just go here. No description. Okay. Let me see if I can find it somewhere else. Oh, it's a retailer. They're losing money. $1.50 they're going to lose in 2014. $1.01 they're going to lose in 2015. It seems kind of doggy to me. Not sure why it's running. So I don't know. I don't think I'd mess with that one, frankly. But they sell furniture online. Habit. Is that Hamburger Habit? I got to tell you, when I worked in Century City many years ago as a broker at Payne Weber, Hamburger Habit was a favorite place to go eat. Of course, it's bad for you. I don't eat those anymore, but it's trying to turn. Another IPO trying to turn. There we go. Got some pocket pivot type action here. I don't think that's more of a 5-day pocket pivot. This looks a little better. You got to get past this, and I don't think it does it there because this is 407, 442, and this is 370, 591. So not enough for a pocket pivot, but it's trying to round out, and they're probably making money, I would assume. The Habit. Do they have those on the East Coast, I'm wondering? Yeah, these guys are making money. So 8 cents a share in the last quarter, so at least they're doing it. So let's see. Why do you like stocks more than ETFs? Because I'm not stupid. Why do I like stock? Because why would I buy ETFs? I mean, ETFs are for wimps. You know, this is why I like stocks. Because they have bigger moves than ETFs. So ETFs are goofy to me. I'm not really. If you want to be wimpy and you can't figure out how to pick stocks, then I think you go with ETFs. You know, unless there's a specific ETF like a GLD or something. But if you need to buy like BBH, and you know, why mess with something like that when you can just own one of the strongest biotechs in the market? You know, so that's why I don't like ETFs. ETFs are for wimps. Like I said, people who are too lame to pick stocks. And if you are and you admit it, I think that's fine, you know, and you buy ETFs and you want to invest that way because you admit that you can't pick stocks. I think that's at least being honest with yourself. So, but for my money, give me a stock that's going to have a move like that. You know, give me a stock where I can jump on it in here and catch this move, or you know, give me a stock where I can catch it here on the 10-day and get that move. Give me a stock that I can buy here and catch this move. You know, that's why. So, anyways, any other questions here? It's 8:03. I want to wrap it up. So, some ideas. You know, you're seeing some things pull back. I think for the most part, you want to watch the better leaders as they pull back, because I do think that if the market consolidates here for a while, you'll see some pullbacks, and you want to take advantage of those, I think, to buy some of the better stocks. I'm watching PAYC starting to move, trading 426 now. You're going to probably, well, let's see here. It's getting up to pocket pivot volume. See that? It's almost there, but it's mid-range, so I don't know. Now, I think the other issue here is the general market. I think you're going to pull in, so it's the trick here is just laying back and watching these things pull in and picking them off there if you're going to try and buy on weakness. Now, the other thing to watch out for is if we go into a deeper correction than you think, in which case, if you're buying something, say, pulling into a 10-day or 20-day moving average, and you want to have your stop in mind so that you don't get your head ripped off if we get into more trouble. The third option here, or maybe just the second option, I forget how many options I talked about, but is to be short a couple of names, and because I think they're showing up, and you can start to treat the market on a correction and a pullback. You can treat the market as a market of stocks, and a bifurcated market can emerge on a market pullback where you see some good short sales set up, and you go after those, and maybe you want to hold a couple of longs that you like, and then you're up on pretty good. If you want to play that way, you know, like I've told people, you could have bought cyber and you could be holding it and sitting through all this if you bought it down here. But the way I play is I'll go in real heavy here, and boom, go in heavy here, and then play this move and then sell into it, and then hang out and wait to come back in heavy again. But it's holding up okay, but I think it needs more time. I could be wrong, but that's what it looks like to me. So, you know, some of these names, if you're up big on them and you want to try and work a longer term position, and you have a reasonable trailing stop, because you don't want to let it go away, you know, because it can. I know, you know, a guy who's all proud of himself for buying GoPro down here on the breakout, and he never sold it, and so he still owns it. And as far as I'm concerned, buying it perfectly, watching it go up like that, and not even selling, at least notice how you break down through the 50-day here, but you bounce off the 65-day exponential, and it does it twice. So once it gets through that, though, that's pretty much it. But not having an idea of where you're going to take your profit or get at. And so all you do is you buy it here, and now you're at a loss. And to me, that's just incredibly stupid, for lack of a better word. So Bill O'Neill used to get on my case because if I thought something was stupid, I would call it stupid, and he would say, well, you can't say that, it's not polite. It's like, but what if it is stupid? Find another word, he'd say. Anyways. Somebody, last question here before I go. If you buy Voodoo pullback to the 10-day or 20-day and the name does not move in 1 to 3 days, when do you cut it for not moving? It depends. Generally they can take 2 or 3 days. My way of operating those, I would buy the position and then give it a few days, and if it drops below the line and the volume picks up a little bit, I might just blow it out and kiss it off. So that's frequently what I'll do in that case. So. And it really is there's no hard and fast rule about it. If you say to yourself, okay, I'm going to buy this pullback here and it needs to get moving in 3 days, then you could set a time stop. Livermore used to do that. He would set time stops as well as price stops, and basically he's giving something a chance based on the setup. He's going to give it a chance to get moving. If it doesn't, then he is going to punt. So anyways, I did want to let's see, is LT getting hit? This ACAT I thought was interesting. It's been moving up. It's holding the 10-day. They came out with earnings. Let's see. Looking around, just a couple other notes here. I'm watching the Splunk. See, it's trying to bounce off the 10-day, so it comes back on top. It's bouncing. So now watch it on the. You want to watch it here. See how it's coming into the 20 period now. I don't know if it becomes shortable here. It might. So you could always try shorting here and then cover on a buy signal if you get across to the upside. So. But I think this thing, you've got workday, Splunk, and data setting up as potential late-stage topping type patterns, and looking pretty grim right now. So, anyways, last question. NXP, yeah, you like it today? You didn't like it yesterday. It's a slow mover. Maybe eventually it's going to get moving, but it's a you had a big shakeout here. That would be hard to sit through, frankly. But it comes right back up and just kind of trudges to new highs. This sort of stuff is too slow for me. I like to wait for the right setup, and then it should get moving, get some upside velocity, and just going big. But that's my style. Anyways, that's all I've got today, you guys. Hopefully this was helpful. As always, if you had any specific feedback, you can email us. You know where we're at. So thanks for showing up again, and we'll catch you guys next week.